All right, welcome back, guys. My name is Abolade Hadekola, as you guys know. All right, so guys, for those of you who have just joined us, we are just getting started right about now. So if you can hear me, please type in 222 in the chat. For those of you who have just joined us, everybody put in 222 in the chat if you can hear me loud and clear, guys. I want to be sure everybody can hear me and we are on the same page. If you can hear me, put in 222 in the chat. All right, thank you so much, Prophet. Mr. John, thank you, Miss Prince. All right, Isaac. Glad you guys can hear me. So let's get started right about now. Let's get started. I'm so delighted and super elated to be with you guys again today. And today is going to be an amazing lecture for you guys. All right. For those of you who have been trading before, this part is going to be really of great help to you. And for those who are totally new, this is also an important lecture. So like I said a few minutes ago, put everything that is going to distract you or take your attention away from this class, put it aside. Pay close attention to what you'll be learning today, guys. So I really want to welcome you guys back to class. So before we go deeper into this class, let's quickly run 5 minute recap on what we've learned yesterday, guys. Okay, let's make 5 minutes recap. But before that, I hope you guys you have been able to, for those of you who are new, you have been able to uh, register with the broker, and have you been able to go through the Mt4 basic video which I sent to you. Okay, through that you can be able to learn one or two things about the trading platform. So without having good knowledge about the trading platform, guys, it's going to be really difficult for you. So you want to learn it, you want to know how every bit of information on the trading platform works, because that is where you are going to be placing your trade. All right, so it is very important for you guys to learn it, master how everything works on the trading platform. All right, because you're going to need it. So if you have registered your account, please let me know in the chat. If you have registered your account with the broker, please let me know in the chat. If you have any challenge, uh, quickly put it in the chat. Let's talk about it under 2 minutes, because today we have a lot of things to cover. And trust me, it's not going to be as long as yesterday, because we had yesterday to introduce a lot of things to each other and all of that. So today we should not spend more than 1 hour 30 minutes, but this 1 hour 30 minutes is going to be a very strong information to you guys. All right, most especially the newbies. So guys, let me know in the chat if you have any challenge with the broker or anything at all based on what you've learned yesterday. So while I proceed with everything, yesterday we talked about ingredients of success in trading. I said for you to become a successful trader, these are you need to put into your trading career. If truly you really want to take this as a business and you want to be successful in this business, trust me, you don't want to deviate from these key things. All right, risk management, that is the number one. Okay, it is very paramount in your journey as a trader. Proving strategy, it's highly important. Balance emotion, you need to be able to balance your emotion. Market knowledge, this is where everything that has to do on this platform, uh this is where it resides. You need market knowledge, you need how everything works to be able to trade and become successful. All right, so for you to become successful, you need a coach, you need a mentor, someone who can hold you by the hand and show you the way. All right, so once you have someone who can show you by the hand and show you the way, it means you are already at the topmost part of it. Okay, once you have someone who take you by the hand, it means you are already there. Right, so after everything, even if someone is taking you by the hand, if you do not practice what you've been taught, trust me, you are going nowhere. So consistent practice is one of the most important things you need to do. If you really want to become successful, you must dedicate some time. So yesterday we talked about what is Forex. So I'm double sure you guys, you are highly familiar with what Forex is all about and how everything operates uh, with the exchange, right? So we talked about the asset, the things you can trade under financial assets. We have currency, we have shares, we have indices, we have energy, we have commodities, and cryptocurrency. All this we explained in detail yesterday. This is just a quick recap, just to bring your memory back so that we can be able to connect from where we stopped. So yesterday we also talked about market participants. All right, I laid a lot of emphasis on this, that these are the people we are trading against. Okay, you and I, we are retail traders. All right, we are retail traders. So it is very, very important for us to know those who are participating in the same market with us. Okay, so we have the central bank, the commercial bank, the financial institutions, and the hedge funds. So you already know those who are moving the market a lot. So once you know the direction these people are trading, then it's going to be of great help to you. You're going to make consistent profit in the forex market. We're talking about business of forex, all right? It is minimal investment. You don't need more than $200 at least to start with, all right? So it does not take much of your time. So you need few hours to be able to trade every day. So forex has no rigorous process for you to become for you to get yourself established in the business. What you need is a sound knowledge, computer, and internet, all right, and later on with your phone. So it is recession proof. I explained a lot of things about this yesterday, and I said you need, for you to become successful, you must be willing to work hard. So and I'm sure this goes with every other business across the world. So but for forex, you need to put in extra, okay, because once you master the skill, that is it. So to gain access into the forex world, I explained a lot of things about brokers, which I am double sure you know who a broker is and you know their role. You know how they offer service. So I'm sure you guys, you've been able to register with our own recommended broker, because we've been working with the broker for quite some times now, and everything with them has been good. So that's why we are confident to recommend them. Okay, so if you have any challenge, let us know. So yesterday we also talked about trading time frame and sections. So I'm sure this is very, very clear to you guys. When market opens and the time market close, uh the time market opens and when it closes at each region. So for Australia, Japan, London, and New York. So these are the time each of the currencies, the market opens, and this time that is when each of the currencies becomes stronger. Okay, all right. So yesterday we talked about forms of trading: technical analysis, fundamental analysis, and market sentiment. These are the three core forms of trading, and the most important of them all, which every trader needs to know and must know, is this technical part of it. All right. So now today, guys, we'll be proceeding with so today we'll be moving to the next slide. Today we'll be talking about Forex Basics. Okay, Forex Basics. Forex Basics is quoted in currency pairs. Okay, Forex is quoted in currency pairs. You see, each currency is given a three-letter code. Some people does not even know this. All right, but for you to become uh, a trader, a prospective trader, this is where the journey starts this is where the journey begins to make sense. Let me put it that way. This is where it begins to make sense. It is very, very important for you to familiarize yourself with these three letter words. It is highly, highly important. And as a matter of fact, by default, you will know it. Even if you don't know it now, you will know it by default, right? Because you're going to get yourself familiarized with them gradually, gradually until it becomes part of you. So each currency is given a three-letter code, which means it is shortened and becomes three-letter uh, code. So we have eight major uh, common currencies. We have euro, we have US dollars, we have Japanese yen, we have Swiss franc, we have Canadian dollars, we have New Zealand dollars, we have Great Britain pounds, and we have Australian dollars. Now, look at all these eight quoted pairs, guys. These are the major currency pairs. Some of you guys may be thinking, why are other currencies not listed? Obviously, you can find a lot of currencies in the forex market, but these are the major ones. All right, these are the major ones. These are the major ones, guys. So for euro, it is shortened to be EUR. US dollar is shortened to be USD, while Japanese yen is shortened to be JPY. Right? Swiss franc is shortened to be CHF, while CAD, Canadian dollar is shortened to be CAD, and New Zealand dollars, as you can see, is shortened to be NZD, New Zealand dollars, and Great Britain pounds is shortened to be GBP, and while Australian dollars is shortened to be AUD. So like I said, you need to get yourself familiarized with these eight major currencies, all right? Because these are the eight major trades a lot, all right? So after these eight major currencies, we have other currencies as well. We have other currencies. So we have Swedish krona, we have Danish krone, we have Singapore dollars, we have South African rand, we have a lot of them like that. But because people don't trade this pair as much as all these ones, that is why they are not part of the most common currency symbol, most common currencies. All right, these ones at the left hand side are the major ones people trade a lot. So people don't trade this as much. So all these ones are regarded as exotic currencies. All these ones are the right hand side. Have much more than this, all right? But this should be your focus for now, all right? So successful traders only trade seven, in fact, this is eight most common currency. There's a typo here which will be corrected. It is eight major currencies, which are these ones you can see right at the right hand side. So for this, for what you're seeing right here, people like to trade across US dollars, which is the pairs that has US dollars. You can see we have euro versus US dollars, Great Britain pounds versus US dollars, US dollars versus JPY, and on like that. All right. So these are the seven common currencies people like to trade. So because it involves the US dollars, you can see every one of them involves the US dollars. So that is why people like to trade them a lot. But to me, I don't see this as the common ones. All right. Every currency that moves very well when people put money, to me, I see them as common currencies, because these are the ones that are really, really common, because people trade this a lot at every point in time. All right. So a lot of people like to focus on US dollar pairs. So, but it does not really matter. It does not really necessary that you also need to focus yourself much on this. No. Once you have a perfect strategy, you know what you are doing, you can trade anything that has to do with charts. So that is why you need to have a good knowledge of how the market works, so that you can be able to master everything gradually and eventually become a successful forex trader. And a successful trader must definitely uh it must definitely be a good trade. I mean, a successful trader must be an educated trader. Okay, you can never ever become successful in the forex market without being educated. Okay, and this is where the education starts from. All right, so let's keep proceed. Let's keep moving. So get yourself familiarized with these guys. You may want to take a lot of screenshots as we proceed, guys. You may want to take a lot of screenshots because you're going to need them. All right. So let's keep moving. Currency exchange rates. Currency exchange rates. How does the exchange rate works? How does the exchange currencies are quoted in pairs? Okay, currencies are quoted in pairs and mostly in 4 decimal places. Guys, uh, most especially for those of you who are new, please pay attention to every bit of information I'm going to share with you right here. And those of you who are not who have been trading and you know one thing or the other about trading, pay attention as well. You're going to pick something that is going to interest you while we keep moving with this. Currencies are quoted in pairs and in 4 decimal places. What does this mean? Now look at it is quoted in pairs and 4 decimal places. It means every currency pairs it is quoted in 4 decimal places after the decimal point, which means the 4 numbers after decimal points is what you are working with. All right, I don't know if you are getting me, guys. It means the 4 numbers, the 1 2 3 4, from 3 1 2 3 4, these are the numbers you want to work with. Okay, these are the numbers you want to focus more on when you are trading every currency pairs that has numbers. That is what it means by currencies are quoted in 4 decimal places. Now look at this. We have euro versus US dollars. It means you want to trade euro versus US dollars. What does this mean? Right here, euro is known as the base currency. Euro is known as the base currency. What is our base currency? Base currency is the pair, is the currency at the left hand side. Okay, the first currency, and it is invariably the currency you want to work with. Yes, it is the currency you want to work with. Either you are buying or you are selling. Base currency is the currency is going to you're going to put in your focus on. So the first currency at the left hand side, it is known as the base currency. Please note that down, okay? Because these are common words in the forex industry. When they say what is the base currency, you should be able to identify that. So euro is known as the base currency, while US dollars is known as the quote currency. Quote currency. So the currency at the right hand side is known as the quote currency. Now I will explain this further. What does what we are looking at right now, what does it mean? Euro is base currency, US dollars is quote. It means euro versus USD. This means 1 euro right here is equivalent to 1.3505 US dollars. I will come back to that level again. Let's keep moving. I'm still coming back there. Now, right here, look at the on the fourth decimal number, which is the quote amount, right? We have, this is the quote number, right? The fourth number on the quote number is known as the pip. And as a matter of fact, every currency, this is what every currency we have, all the currencies that has four decimal number, this is what it's going to have. You're going to see something like this. Let's say, let's use this as an example, 1.35052. All right. Normally, we should say this is 5 decimal number. All right. I hope you're getting it. We should say this is 5 decimal number. But why do we say it is 4 decimal? Because this is the smallest, and this 2 is the smallest, and I will explain why we are putting that aside. It is very, very important as well, but I will explain why you don't want to focus more on this. Why you want to, why we say 4 decimal number. Now, as you can see, let me clean everything, so it can make some sense. The fourth number right after the decimal point is known as the pip. So at every point in time, if you are calculating your risk, if you are calculating your pip, you are going to be using the fourth decimal number. Anytime you want to calculate your pip, okay, either your stop loss, we'll get to that level, either your stop loss or your take profit, this is what you want to be working with, pip. That is why we say 4 decimal places. All right. Now, so the fourth number after the decimal point is known as the pip. Somebody said I can't hear anything. Oh, okay. All right. HBM, you're welcome. You're welcome, sis. Okay, somebody said I'm on highway. Yes, I dropped the, let me try to drop the recommended brokers link right here again. So this is not the time for question and answer, but let me quickly drop that, guys. We're still going to come back to that level. Okay, so just copy that link, everybody. Okay, I think let me put it to everybody. Few seconds, guys. So copy that link, then you're going to copy it, click on it, and register with the broker after the class. So pay attention to every bit of information I want to share with you right now, so that you don't get to miss the vital part of it, guys. All right, I hope this is clear. So let's keep moving. So now I'm talking about pip. Pip is the fourth decimal number after the point. All right, so this is what you want to be working with at every point in time whenever you want to calculate your pip in profit. Okay, either your take profit or stop loss. So we are coming back to that aspect so soon. So this is what you want to be working with, the pip. So take note of that. So right after that, the fifth decimal number. Okay, you can see I just like make it so small so that we can be able to differentiate it. So this is known as the fractional pip or point. A lot of people call it point, but it's also fractional pip, which is the smallest part of pip. So you can get this, for you to get a pip, for you to get 1 pip, you need to get 10 of this. Okay, just like you want to get $10, automatically you can't get, you only count from 1, 2, 3, 4, 5 to 10. So that's how it works. I'm still going to explain deeply on how you will calculate Pip. So the points right here, this one right here will make some sense to you guys. So let's keep moving. So take note, decimal number after the fifth decimal number is called the points, while the fourth number is called the Pip. So at every point in time, you want to work with the Pip. I hope this is very, very clear, guys. So now, this diagram you are looking at right in front of you, it is known as Euro USD. It means 1 euro is equal to 1 US dollars. Sorry, 1.3505 US dollars. So once you give 1 euro, you are going to get 1.3505 US dollars. So now look at the base currency always has a value of 1, right? So 1 euro is equivalent to 1.3505 US dollars as at the time this slide was created. So you are giving 1 euro. If you want to make an exchange rate, if you are giving 1 euro, okay, take 1 euro, then you collect 1.3505. If you want to sell 1 euro, you collect 1.3505. So if you want to buy 1 euro, it means this is the value of what you are going to pay. I don't know if this is getting clearer to you guys. If you want to buy 1 euro, you do not have euro, all right, but you need euro. So for you to get 1 euro, okay, for you to get 1 euro, you need to give 1.3505 to get 1 euro. So you have US dollars in your pocket, and you are going to an European country. You have US dollars in your pocket, so it is automatically for you to get euro in your pocket before you go to any European country. So you need to change this to euro. So you need to give 1.3505 for 1 euro to be able to get 1 euro, and vice versa. If you want to sell your euro, this is what you get. I hope this is making some sense, guys. So if you have any question along the line based on what we're teaching, please just put it in the chat so we can attend to that while we are moving. So let's keep moving, guys. Now, if you want to buy 1 euro, you have to pay, I've explained this, you have to pay 1.3505 US dollars. And if you want to sell 1 euro, you will receive 1.3505 US dollars. It's as simple as that. So I've already explained this, but this is just for you to know how it looks like. Now, we're going further on the currency exchange rate. Guys, if you are with me on the same page, type in 3 in the chat. I want to be sure you guys are following. Type in 333 in the chat if you are with me on the same page. Type in 333 in the chat, everybody, if you are with me on the same page. I want to be double sure you guys you're following. So we are 17 on the call right now. So I want everybody to put in something in the chat if you're following, all right? All right, great. Let's keep moving. Time is not on our side. So let's keep talking about currency exchange rates. Guys, it's getting more interesting as we approach each. It's getting more interesting, trust me. So while all other pairs are coded to 4 decimal places, which means 1 pip is equal to 0.001. All right. So it means for you to get 1 pip with euro US dollars, euro USD, for you to get 1 pip, it means it must move, the currency must move either to the upside or to the downside. It must move with 0.0001. Okay. So this is how currency moves. So this is what you need to know. So while other other pairs are quoted to 4 decimal places. The Japanese pairs are quoted to 2 decimal places. You need to know this, guys. So the Japanese pairs, which means the JPY, it is quoted in 2 decimal places. So which means it is different from other pairs. Every pair that has to do with JPY, which is Japanese yen, is different with every other pairs. So we have Euro JPY, we have Swiss franc JPY, we have NZD JPY, we have GBP JPY, we have AUD JPY, we have CAD JPY, everything against JPY. So all these pairs that are paired with JPY, with Japanese yen, has 2 decimal places. Okay, so now let me make a reference. The Euro USD, we have 1.3505, right? Am I correct? So this one has 4 decimal places, but now look at this one, has 2, just 2. Okay, and based on the currency, the economy of the currency, which is Japanese yen. So all other pairs has they are the base currency against Japanese yen. Every other currencies are the base currency against Japanese yen. So that is why it is quoted in 2 decimal places. I don't know if you getting this information. I don't know if this is making some sense to you. So let's keep moving. For those of you who are totally new, it may look like a magic to you right now. That's how it usually looks. But later on, as you get yourself familiarized with the whole process, it's going to keep making some sense to you, and you are going to keep enjoying it. All right, and eventually start making money with this process. So now let's keep moving. So the Japanese yen, the Japanese pairs are quoted in 2 decimal places. Just keep remembering that. All right. Now look at this. So the second decimal number is known as the pip. Remember, on Euro US dollars, we have 1.3505. Okay, why this one, which is the 4th one, is known as the pip? Is known as the pip. All right, but look at this one. The second one is known as the pip. You don't really need to crack your brain with this. If you see any pair that has to do with JPY that involves Japanese yen, you should automatically know that it has 2 decimal places. That is just it. So which means the second number is the pip, and that is what you want to work with. Okay, so and the third number is known as the fractional pip or point, just the same way we have small 2. Okay, we have 2 at the back of 5 with Euro USD. So this also has its own as well, known as the fractional pip or point. So it is this point or fractional pip that moves from 0 to 10. Now, you and I know how the milliseconds works. You know milliseconds, right? Milliseconds count from 0 to 10. So once it counts from 0 to 10, then it goes back to 0 again. Once it counts from 0 to 10 again, that one becomes 2. And when it counts from 2, from 0 to another 10, it becomes 3. So that is exactly how fractional pip or points works. I hope this is clear, guys. So for this 3 to be able to change to 4, this one has to move to 10. So the moment this one moves from this 4 to 10, this one will become 4. And vice versa. If it moves down 3, 2, 1, this one will change to 2. And if you count from 0 again, downward again, this one will change to 1 again, which means market is dropping. And if market is pulling up, this one will continue going up. It will not be going down. I hope this is clear. So for you to get 1 pip, you must get 10 of fractional pip. Okay, 1 pip is equal to 10 points. Okay, guys, just forget about my pencil. I hope you can just understand everything I wrote. Okay, so for you to get 1 pip, you need 10 points. So I'm still going to explain deeper on this because you really need this information a lot. Every trader needs this. All right. So guys, that is fractional pip, and the second number, the second decimal number is called the pip, and that is what you want to work with on any Japanese pair. So without wasting much of our time, let's keep moving. Somebody said I need this recorded. Of course, we are recording it, but it is a must you be in class because I'm not going to attend to any question once the recording is out. So the question and answer is basically for those who are live, because I know a lot of people are waiting for this recording. Okay, I know few that are very, very busy that can't attend, but I know those who are always lazy and waiting for recording to be posted. And before you know it, they jump in on YouTube and start, then thereafter they start asking you some questions. We get you annoyed that they should have been in class to ask you the same question and to the benefit of. So they want you to answer the same question. So I'm not going to answer any question outside live section. So that and that is what we are going to be doing right from this spot on any training we are going to do. Anyone that is not in live class, I'm not going to give any answer to any question except something that has to do with the technical aspect or something I see this needs to be attended to. All right. So for you to be here, it means you are serious. You want to be successful, guys. The road to success may be rough. The same thing goes with Forex. You will face one challenges or the other. But trust me, once you start getting the result, your result will cancel any insult from anybody. I remember when I started trading, a lot of people were saying, oh my Lord, blow away. Don't worry, you will start losing money. You will start losing money. But now my result has canceled all the insults. So it's going to be the same story for you guys. My golden advice for you is that learn the process the right way and don't quit and keep pushing. At the end of the day, you're going to be thankful to God. So let's keep moving. So guys, so as you can see, this quote tells is that $1 is equivalent to 98.73 Japanese yen. So for you to get if you produce $1, if you want to change $1 to Japanese yen, you will get 98.73 Japanese yen. Okay, so and vice versa, if you want to get $, you will need to bring $1, you need to bring in 98.73 Japanese yen. Okay, and don't forget the first currency right here, as I've mentioned earlier on, this right here is known as the base. All right, is known as the base. Why this one is known as the quote? Okay, this is the base currency and this is the quote currency. So and at every point in time, I repeat again, I have explained this earlier on with Euro USD. At every point in time, if you want to trade any currency pair, you are dealing with the base currency. You are dealing with the base currency. Either you are selling the currency pair or you are buying the currency pair. You are dealing with the base currency. Now, let's say, for example, you want to sell this pair. You want to sell this pair. It means you are selling USD. It is not possible for you to sell the two at a time. You want to sell, you are saying this pair should go down. It is not possible for you to sell the two at a time. No, you will only sell this one, which means you are buying this, you are selling this. Guys, this is a technical explanation that a lot of people don't explain to people during their foundational course. I know it. I've been there, done that. Trust me. I'm telling you the truth. A lot of people don't explain this. So the base currency is the currency you are dealing with. So if you are saying this pair should rise, it means you are saying US dollars should go up. So if this should go up, this one will go down. As this one goes down, it means this one is weak. The quote currency, which is the Japanese yen, the one at the right hand side, it means this one is weak. All right. So as this one is weak, this one will go up. All right. So and if you say you want to sell this pair, it means you are saying US dollars is weak and Japanese is strong. So if this one is strong, this one, if this one is strong, the pair will fall. If this one is strong against this one, it means the pair will go down. All right. But if this one is strong and this one is weak, it means this pair will go up. I hope you understand this simple explanation, guys. I hope this. Somebody said on mute audio we can't hear anything. Guys, please, this is ridiculous. My audio is unmuted, so if you can hear me, everybody typing, I can hear. Typing, I can hear. If you can hear me, everybody. Anderson, you probably need to work on yourself. Somebody should please help him out by typing in. Okay, probably you need to log out and come back in. Somebody should please type in something what you need to do. Probably tell him to log out and come back in. Okay, I'm so glad everybody can hear me. So I think the problem is from his end. All right, so thank you so much, guys. So what am I talking about, guys? This is what you need to know. The moment you need to know which currencies you are dealing with, then that is all. That is all. So once you are buying, you are saying you are buying, it means you are buying US dollars. You are simultaneously selling JPY. All right. If you are buying this pair, I repeat again, if you are buying this pair, you are saying US dollars should go up and Japanese should go down. And you are simultaneously buying this one and selling this one. Somebody, you may be thinking, how can it be possible to buy this one and sell this one at a time? Reason why I put the explanation that way is simply because they are paired. They are paired together. Okay. So if this one is going up, this one is automatically coming down. So it means this one is selling, this one is buying. And at every point in time, remember you are dealing with this. All right. So I hope this is very, very clear to you guys. So let's keep going up. Let's keep moving. So now let's talk about bid price and ask price. Bid, ask price. Trust me, guys. These are the things you need. We are coming closer. Okay. So what is bid price? In the layman understanding, bid price is when you are buying something. Okay, you are bidding for something. You want to buy a house, you want to buy a car, you are bidding for something that a lot of people want to buy. So they want to give it to the highest bidder. All right. So the same thing goes with Forex, but in the other way around. Bid price. This is the price a Forex trader will sell at a currency pair. This is the price a forex trader will sell a currency pair for. All right. So which, remember, in the normal world, bid price is when you want to buy something. Bid price is when you want to buy something, bidding for something, you want to buy that thing. All right. That is what you are bidding for it. You want to buy it. But in this case, in forex, it means you want to sell. So when we talk about bid price in forex, it means market will be the one to bid for the price from you. I don't know if you guys are getting this. Bid price. Now let's view this way. Bid price and ask price. Market will be the one to push it to you. Market will be the one to issue this price. All right. So you are not the one to issue anything. Market will be the one to issue the bid price and ask price. So the bid price is the price market is willing to buy from you. So you are selling into the market. Look at this. Is the price a forex trader will sell a currency pair. Is the price a forex trader will sell a currency pair, which means market is saying, okay, oh, you want to sell. Let me try to explain something right here. Market is saying, I want to bid for a particular currency pair. I want to buy from you at 2 naira. Let's say 2 naira, or let's say $2. Okay, let's use dollars. Let's say $2. Market will be present this price to you. Okay, if you are okay, you will now sell. If you are not okay, you will wait for the price you want to sell, which means at every point in time, this will continue to change. Just figures, I'm going to launch in my MetaTrader 4 right after this explanation so it can make some sense to you guys. So bid price is what is the price market will present to you. So, and is the price you are going to sell into the market. For example, now you want to sell a particular currency pair. Let's say, okay, let's use USD If you want to sell USD now remember, this is the bid. You want to sell it. You are going to use the bid price. Okay? If you want to sell, you are going to use the bid price. So if this is the bid price, this is what you are going to sell it at. Because the bid price market will be the one to you. I hope this is clear, guys. So, and if you are selling, sorry, and if you are buying, you are going to use the ask price. So ask price is the price a forex trader will buy a currency pair for, which means a market is asking you, okay, if you want to buy, market will not ask you what price do you want to buy. So market will be the one to present the ask price to you. All right. So guys, you need to take time to understand this if this is not clear to you. That's why I'm taking my time to explain it in different way. All right. Okay. So I'll just make brief explanation on this again. Remember, in layman understanding, layman word, if you are bidding for something, it means you want to buy. So you should be buying. No. But in the case of market, you are selling. So market will be the one to present bid price and ask price. So if you are selling, you are going to use the bid price. If you are buying, you are going to use the ask price. So keep noting that, guys. Write it down in your jotter the way you will understand better. But always remember, market will be the one to present these two prices to you. Right? So both of these prices are given in real time and are constantly updating, and the difference between the ask and the bid price is the spread. Okay, The difference between the ask price and the bid price is the spread. What does this mean, guys? It means the bid price and the ask price can never ever be the same. Okay, which means there will be a small, a slight difference between the two. Okay, let me try to put on something. Let's say uh, if the bid price, okay, which is the price you want to sell, is 3, let's say 30, all right, and the ask price is let's say 32. Okay, so you will notice the difference between these two, within these two prices, is just 2. So this 2 is known as the spread. Guys, if you are getting some value, please type in value in the chat. If you are getting some value with what I'm revealing to you guys, please type in value in the chat. Everybody, put in value in the chat if you are getting some value. All right, thank you so much, guys. So happy you're getting some value. But remember, if you have any question as we are demystifying it, please try to put it in the chat. Okay, try to put it in the chat or write it somewhere, write it down somewhere. Then at the end of the session today, you can just put it up when we open the session for question and answer, so we can be able to talk about it. Somebody said network issue. Okay, you need to work on that. So the difference between the ask and the bid price is known as the spread. Okay, so the spread is where the brokers makes their money. The spread is known as the commission for the broker. Yesterday I explained a little bit about broker and how they operate. So a broker is just like an agent that connects both tenants and landlords together, or two parties together. Okay, so for the middleman to connect two parties together, it means there must be there must be some kind of benefit for the middleman. Okay, which means a commission or something like that that will be of a benefit to him for introducing the two parties. So the same way with the brokers. So the difference between the ask price and the sell price is what the brokers will earn, and this is known as the spread. All right, so let me just few seconds, let me try to launch in my Mt4 so I can show you few things before we, just few seconds, guys. Just few seconds. Just want to show you how to, to be able to, seconds, I'm still on the same page with you guys. It's important to be able to show everything to you so you can understand how it works. See, guys, Forex is all about practical, okay? 90% practical, 10% theory. That is it. 90% practical, 10% theory. So for you to become successful, you must be able to practicalize everything you're learning. Just few seconds, guys. I'm going to go back to just few seconds. I'm still with you guys. Just few seconds. I'm trying to bring in something up, so something that can interest you. Still with you. I'm still with you on the same page, guys. Beg your pardon. Okay, so let's keep moving. Okay, so I hope you guys can see my MetaTrader 4, the trading terminal. Okay, so if you can see my trading terminal, quickly guys, put in one in the chat. If you can see my trading terminal, put in one in the chat, guys. If you can see my trading terminal, put in one in the chat. Something that looks like a graph and with black background and some set of currency pairs at the left hand side and some numbers. So this is just for those who are new. All right, good. Everybody can see. So guys, I'm quickly going to explain spread right here. Look at this, guys. We have the bid, we have the ask. So I explained earlier on. Look at market will be the one to present this to you. Okay, at every point in time, this is the bid price, this is the ask price. So the bid price is the price you want to sell. So if you want to sell right now, this is the price you are going to use. If you want to sell this currency pair, this is the price you are going to use. And if you want to buy, this is the price you are going to use. We are still going to talk more about all these guys. Don't worry. So now let's go back to spread. Look at this one right here. You will agree with me when you take this one away from this one, the ask price away from the bid price, you will see the difference between the two is this number. Okay, just quick and fast calculation, guys. Take this away from this, take this away from this, you will see that the difference is this 21. So this 21 is known as the spread. So this is the broker's commission. This is what the broker earns as their commission for giving you access into the Forex market through their own platform, through their own website, through their own service. So this is where all brokers, this is how they earn their own money. All right. So you may be thinking this is very, very small. Yes, it is very, very small. But when they collect this from 100,000 customers at a go, you know what that means. Okay, so this is the spread. This is the ask price. This is the bid price. And you will notice something, guys. Let me try to enlarge very well. You will notice something that at the ask price with AUD, USD, Australian dollars, and United States dollars, you see the ask price as 5 decimal number. All right. Now, the same thing goes with the bid. The fifth number right here, I will quickly explain this. The fifth number right here is known as the point, the fractional pip, the one I'm pointing my mouse to, is known as the fractional pip, which is point. While the fourth one right here is known as the pip. So at every point in time, your calculation will be based on pip. So that's why we say 4 decimal places. So for this one to change to 2, it means this 4 must change from 4 to 5 to 6 to 7. And when it is 10, this one will become 2. And this one will start counting from 0 again. And when it counts from 0 to 10 again, this one will change from the number it is to another higher number. And if the market is dropping, the same thing will happen. This one will keep depreciating, and this one will keep going down, and all of that. I hope this is clear. So this is the spread, right, guys? I hope this explanation is very, very clear to you guys. If this is not clear, everybody, please let me know in the chat. I like to be clear with all our students. So when something is not clear, we like to go back to explain it better, because the aim and goal is to be sure that everybody understands everything we are sharing. Okay, and that is how we roll in all our classes. When a student, among others, does not even understand a particular thing, we make sure that particular student understands that particular thing before we move on. Otherwise, we are going to remain on that spot until that student gets it very well and gets it clearer and can confirm and prove to us that he or she gets it very is right with it before we can move on. So that is how we roll, and that is one of the things that has earned us credibility. So guys, back to our slide. I hope you guys can see you can see my slide. So we're talking about spread. So quick definition of spread. Spread is the difference between the bid and ask price. Okay, if the value of the ask price is 1.3405, while the bid price is 1.3405, and the difference calculated as 1.3405 minus 1.406 is equal to 1. So which means the difference between the ask and bid price is just 1. So this is just 1. This is what the broker will earn as their own profit. All right. I hope this is very, very clear, guys. So you need to know what spread is all about. All right. So it's getting really, really, we are moving further. We are moving higher, guys. So price interest points. Price interest points known as the PIP. Okay. Price interest point known as the PIP. So the PIP is the smallest change in value for any given forex quote. All right. Some people call it point in point. Some people call it what is it again? I think it has two other names people call it, but I like to call it price interest points. Okay, price interest points. Okay, no matter what you call it, you just need to understand what it is. I hope this is clear. But one of the most common one is price interest points, and a lot of people, a lot call it points in points. So now let's keep moving. PIP is the smallest change in value for any given forex quote. All right. So for all non-JPY pairs, right, guys, all JPY pairs, one PIP represents for all none, which means all the pairs that does not include JPY, like like uh like the GBP, Great Britain pounds, USD, oops, sorry about this, guys. Okay, let's say USD, USD card. Okay, let's say card. We are not using JPY. So any pairs that does not include JPY. So one PIP represents the fourth decimal place of the quotes. Guys, I have explained this, and this is just to re-explain this again because you need to know it. Now look at the example we have. When Euro US dollars moves from 1.3505 to 1.3506, it is a movement of 0.001, okay, which is equal 1 pip. I'm going to explain something right now. Now look at this. For this to move from 5 to 6, it means euro is going up, US is dropping. Okay, which means this pair is buying. I hope you understand. Which means this pair, Euro USD, is buying. All right. So for any for this to move, it means the pip has to change, either to move up or to move down. It means the pip have to change, which is the fourth decimal place. So now, if we say this is the 0.000, so if you take this away from this right now, 1.3505, away from 1.3506, this is what we are going to get. All right, guys. But a lot of people will say, okay, when we take this, we will get 1.3 something, blah, blah, blah. But this is just a movement, just for you to know that you want to work with the fourth decimal number. Okay, so if this one should move from 1 to 2, then it means the price, the currency pair is rising. Okay, when it moves from this 1 to 2, okay, to 3, it means it's rising. So it means from when this one changes from 1 to 2, that is 2 pip. When it changes from 2 to 3, it means that is 3 pip. I don't know if you are getting this, guys. So the fourth decimal number, like I said, should be your concern. So when this one change from 1 to 2 to 3 to 4 to 5 to 6 to 7 up to 10, the moment it becomes 10, this one will change from 0 to 1. I don't know if you guys are following me, guys. If this should change, just the same way we have the points. You know, when the points change from 0, count from 0 to 10, this one becomes 1. And when the points count from 0 to another 10, this one becomes 2. So the same way the points operate, the same way this one also is going to operate. So the moment this one keeps counting from 1, 2, 3, 4, 5, 6, 7, 8, 9 to 10, once it becomes 10, this one will change to 1. All right. So on and on like that. But the most important thing is that the fourth decimal number is the. I hope this is clear, guys. So let's keep moving. That's how it's going to be, and that's how it's going to look like in the first place. But later on, you will get it perfectly well. You'll be happy with every bit of information you're going to learn. So Rome wasn't built in a day, sis. All right. So now we've talked about the non-JPY pairs. It means any other pairs that has to do without JPY are the one we have just talked about, which is the fourth decimal number. All right. Why this one? For JPY forex pairs, 1 pip represents the second decimal places of the codes. This is simple. I have explained this earlier on, and we still have this slide just for you to be able to understand how it works. All right. So when USD JPY moves from 0.55 to 80.87, it is a movement of 32 pips. So when you take this away from this, you will realize that we have 32. So when you have when you take this away from this, you have 32. That is it. So any movement that happens from your buy entry to the points of to the point you want to exit, that is going to call the pip difference. Let me quickly explain this in a few seconds. Now you want to buy at let's say 70. I'm talking about USD JPY, this pair, 70.33. You want to buy, okay? And you want to close your profit at 70.53. Guys, please just follow this. I really want to buttress on this so you can understand this. So you want to buy, you buy at 70.33. And now you want to take your profit at 70.53. So the difference between these is just 20. Okay, it's just 20. It means you are okay with 20 pips profit. 20 pip profit. I hope this is clear. So when it moves in your favor, then you're going to calculate the difference between your entry and your exit. That is it. Calculate the difference between your entry and your exit, and where you are going to exit rather. So once you are going to exit, you know where you are entering, then that will give you the value, the difference between the two numbers. So once you know the difference, you are entering at 70.33, and you know that you want to come out when price comes to 70.53. You already know that, okay, the difference between these two numbers is just 20. You know that what you are aiming for is just 20 pips. I hope this is okay, guys. So any question, right? Any question, let me know in the chat, guys. Let me know in the chat. We need to move it faster because of our time. Okay, now this is another one. Trading orders. It is important for you to know trading orders, guys. Trading orders. We have take profit, we have stop loss. What is take profit? Take profit order is an order you give to your broker to exit the trade once a certain profit is reached. Now, I explained something about USD JPY right now. You want to take, I will just explain that in quickly. You want to buy at 70.33. Okay. Now you want to take your order, you want to close your profit at 70.55. This is where take profit comes in. This is another you give to your broker. When you are not there, your broker should close your trade in profit. I could remember a lot of years ago, based on what I read, there was no take profits or stop loss. So it means then they were trading blindly, and it was meant for those who were rich then. But now the take profit, this is another you give to your broker, because it is not possible for you to be trading and be monitoring your trade all the time, because at times markets may move in your favor while you are not there. It may move against you while you are not there. So this is where take profit and stop loss comes in. So take profit, this is the order you give to your broker. Okay, I want to I enter this trade at this price. Now I have entered this trade at this price. You will now set this price on the broker's platform, the trading platform. This is an it is an order you are giving to your broker that once price comes up to this level, close my trade in profit and add my profit to my account. It is another you give to your broker to exit your trade, close your trade in profit. So once the profit is reached to this level, your order will automatically be, it will be closed automatically. So this is very, very good. You have to use it as a trader, because you cannot be monitoring, you cannot stay with your trade every time. There are several times that you will take your trade. Once you take your trade, you will walk away. You put in your take profit number and your stop loss number. So once price comes into your take profit, it will just close the trade automatically, whether you are there or not. It will close that trade automatically in profit for you, and it will bank in your profit and add it to your to your uh to your account. All right. So this is something you must know how it works, and the explanation that I've given right here is just a simple explanation. It's an automatic order you give to your broker to close your order in profit. So now back to stop loss. Stop loss. This is something every broker must not joke with. A stop loss order represents an order you place with your online broker to exit the trade once a certain loss is reached. It is just an opposite of take profit. Yes. So take profit is that as it sounds. Take my profit for me, bank it for me. But stop loss, I am already losing. I don't want to lose more than 1 naira. I don't want to lose more than $1. Once I lose $1, close this account in loss for me. Close this trade in loss for me, so that I can be able to have money to come back and trade another time. There's a saying that says, he who fights and runs lives to fight another day. So for you to become a good and successful trader, guys, it is a must. In fact, 101% must for you to use stop loss. As a matter of fact, I don't respect a trader who does not use stop loss. A trader who does not use stop loss to me, is not a good trader. You may know what you are doing, fine. You may know what you are doing, but I don't regard them. So you must be able to use stop loss. Stop loss is just another you give to your broker to close that particular trade of yours in loss once a certain loss is reached. Okay, so this is where money management comes in. Risk management. I talked about risk management yesterday, and I laid a lot of emphasis on it. So your risk management will work along with your stop loss. So when you don't have proper risk management, you will use your stop loss wrongly, and it's going to affect you. All right. So you must be able to know the number of stop loss you want to use. Okay, so that once the number is reached in loss on that particular trade, your broker will close you out automatically, so that you can have the rest of your capital to trade another time. Who is buying between you and USD? I don't understand what you mean. Are you saying based on this explanation, when euro moves from 1.3505 to 1.3506, you can see we have a up. It means euro is going up. It means euro is buying, and this one is dropping. All right. But when this one decrease, it means euro is weak, this one is strong. I hope that is clear. So guys, any question on trading orders, let me know in the chat. Any question so far before we move to the next slide? Any question so far? So let me know in the chat. If you have any question, put it in the chat. In the absence of no question, type in no. Everybody, type in no in the absence of no question. In the absence of no question, everybody put in no in the chat. Okay, guys. All right. Never ever you you must not. You must not. It's like you going into the battlefield without a weapon. You must not use all your capital. Okay, you can only use between 1 and 2% of your capital at a time. Okay, so whenever you lose, it does not affect you. So when you make profit, you keep uh doubling your account. You keep growing your accounts rather. Okay, this is why where money management and risk management comes in. Ismail rather. This is where money management and risk management comes in when it comes to trading. So you should be able to know how much you are risking at a time. All right. So let's keep moving, guys. Few seconds, guys. I need to something is mixing up here. Sorry. Okay. Okay, so let's keep moving, guys. Let's keep moving. So in the absence of no question, let's keep moving. So now let's talk about lot size, contract lot size. Everybody type in lot size in the chat. You see, lot size, this is another important aspect of Forex. Okay, this is uh this is where a lot of people loses their account. This is where they blow their account. When you don't get this part right, then you are setting your trading account, you are setting it ablaze. Sorry guys, few seconds. Sorry about that, guys. So lot size, it is the amount, quantity of a trade that you bought or sold at a particular time. It is the amount, quantity of a trade that you bought or sold at a particular time. Now, I said this is where a lot of people are missing it, most especially a lot of newbies. When you don't get this part right, there is no way you will not blow your account. There is no way. If you don't get this part right, there is no way you will not blow your account. So there are some key things you need to know about Forex, and this lot size is one of it. Lot size is one of it. Now, I will explain this very well. We have standard lot size, okay? But before I go there, sorry guys, I need to take some water. Need to take some water. Sorry guys, water is life. All right. So let me make emphasis on lot size. You see, lot size is like, how do I explain this for better understanding? Lot size is like a portion. Let's say you want to okay, you want to buy a share in a company, right? You want to buy a share in a company. For you to buy a share, you should know that it is not uh, the portion you want to buy will rely will I don't know how to explain this better. Okay, I will explain the way I can. The portion of a part you want to buy, it means you want to buy part of a particular portion of a portion of a particular thing. Now let's say a group of people have let's say a group of people have 100 shares, and you want to buy, you want to be part of that shareholder. So you can only buy based on the amount you have. You can only buy part of that shares based on the amount you have. Like for example, now there might be a company, and all of a sudden you will just hear that this company has been acquired by so person. So if a company is acquired by by one person, it means that person has huge money to buy larger part of that shares. So for you to be able to buy, to use lot size, this will be in proportion to your trading account. Okay, so this has to do with a particular percentage of your account you want to risk at a time. You want to risk $20 on a particular trade. Okay, so that $20 will determine the lot size you want to buy. I will explain this further. Mr. Hay has $50. Okay, Mr. B has $50. No, let's say Mr. B has $100. Mr. Hay has $50, and they want to buy in the same market. The quantity Mr. B is going to buy, you obviously know that it's going to be more than the quantity Mr. Hay is going to buy, because Mr. Hay has less capital than Mr. B. So the lot size will reflect the quantity of that particular currency pair you want to buy. I don't know if you are getting this, guys. Please let me know if that explanation is clear to you a little bit. Let me know in the chat. See, my advice to you guys is that, Sarah, get a laptop if you really want to take this serious. Don't be deceived. Those who says you can learn Forex perfectly with your phone, they are lying to you. Start with your computer, later on you switch to phone. To understand everything with phone is not hard, but you need to learn and understand everything first before you switch to computer. I will explain this lot size again. In fact, we may close this session right here tonight if this is not clear, but I will make sure this is very, very clear to everybody before we go. Lot size. You see, lot size is like you want to buy a something. The money you have will determine the quantity you want to buy. You have $10. You have $10. This $10 will determine the quantity you want to buy. Either you want to buy 0.01 or 0.01. Let me put that 0.01 and no. Let me clean it. I don't want to confuse you guys. Don't worry, you will get it clear before we leave this session. Trust me. Trust me, you'll get it. is really, really technical, but people don't really emphasis on this. That's why a lot of people are missing out. So you have $10. Okay, so this $10 is going to be some percentage of your account. All right. Somebody asked in the chat earlier on that, do we have to use all our capital? No. I assume this $10 is just 1% of your capital. As at the time you want to place a trade, I assume this $10, let's say, is just 1% of your capital. So this $10 will determine the number of lot size you are to use, you are to buy. All right. Now, let me explain fully about standard lot size and all of that, so we can come back to this, maybe to make some sense to you guys. Let's go a little bit deeper, then I can come back to this later on so you can understand. So we have standard lot size. Standard lot size contains 100,000 units and it's represented by 1. Okay, which means it is 1.00 on the trading platform. We have mini lot size. Mini lot size contains 10,000 units and it is represented by 0.1 on the trading platform. Keep taking note, guys. We have micro lots. Micro lots contains 1,000 units and it's represented by 0.01 on the trading platform. Now, this should continue, should start making some sense to you now. We have standard lot size. We have mini lot size. We have micro lot size. These are the 3 types of lot size we have. Okay, remember lot size. But under lot size, we have 3 types of lot size: standard, mini, and micro. For you to be able to trade lot size or mini or micro, so if you trade standard lot size, it means the money you have in your account as your trading capital is more than the money that the person that is going to trade mini lot size has. And if you trade mini lot size, it means the money you have is more than the money you have in your trading account is more than the person that is going to trade micro lots. Okay, I think I've seen a better way to explain this now to you guys. This is the lot size. The lot size tells you the amount you are going to buy. So you want to use $10 as part of your trading capital to trade. Okay, you want to use $10. So as I said earlier on, I assume this is just 1% of your account. So with this will tell you after calculation, after risk calculation, this will tell you which lot size you are to use. I don't know if this is getting clear like that, guys. After calculating your risk, okay, remember I laid emphasis on risk management. So after calculating your risk, this will now let you know which lot size you are to use, either to use mini lot size or micro lot size. And obviously you can't use standard with $10. You can't use standard. All right, so I hope this is making some sense, guys. So let's keep moving. What is standard lot size? This is 100,000 units, and it means this is 100,000 units of the base currency. It is important you know all these things, guys. So that's why we have it right here. Okay, you are going to pass through it. Don't worry. It may looks really rigorous to you guys, but trust me, it is okay. That is the way it's important for you to learn it and understand everything. So one standard lot is equal to 100,000 units of the base currency. All right. So if you are trading one standard lot, it means you are trading the base currency with 100,000 units. Guys, I hope you're following. If you buy or sell one standard lot, it means you are buying 100,000 units, which is the maximum, the highest lot size. So the lot size, like I said, just like this explanation you are looking right on here, it is the amount, the quantity of a trade that you are going to buy or sell at a particular time based on your capital. Okay, it is your capital that will determine the lot size you are to use. If you are to use full lot size, which is 1.0 or 0.1 or 0.001. So this is the smallest lot size. Okay, this lot size, someone with $100 can trade it, $200 can trade it, $300 can trade it. So for you to be able to start trading this, you must have about let me just say $700 and $700 or 800 upward for you to be able to trade this. Okay, so now this one, it does not really mean you have to stay on 0.01. It can be 0.02. You can trade 0.03, 0.04, 5, on and on like that. But your capital will determine that based on your risk management, based on your stop loss. Okay, so all these things are interwoven. They are interwoven, guys. But just need to know the basic things. Few seconds, okay. You just need to know the basic things on how to merge it together. All right. So now let's keep moving. So I hope, let me know, guys. I hope this is a little bit clear to you guys. I do not expect this to get clear to you guys. Most especially the newbies. I don't expect you to get it at once. No, I don't. Okay. I don't expect you to get this in one class. So if you rewatch this video over and over again, it will start making some sense to you. Okay, that's how you can learn in the Forex market. See, Mr. Ebenezer, putting $250 with $200 trading account, it means you are risking 25% of that account, and that is, you are setting the account at place. All right. So there is a calculation that you have to do, okay, under risk management, to get to know the exact lot size to trade. So if you want to trade with $200 in a nutshell, use it 0.02. Okay, so $100 will represent 0.01, $200 will represent 0.02, $300 will represent 0.03, $400 0.04, 500 0.05. I hope this is clear, Ebenezer. That is a simple way you can trade it. Okay, and this will it will be very, very close to money management. All right, it will be very, very close to perfect money management. So with $200, trade is 0.02, 0.02. So this one will count in multiple of 100 that you have. So if you have $500 in your account, use 0.05. But that is not the perfect money management, but it is very, very near to money management. So that this will ensure that you will not blow your account. All right. I hope this is clear. So guys, for those of you who may be thinking, so we still have advanced program, advanced class after this. So that is where we are going to go in depth knowledge on money management. and risk management, because we don't joke with that. So that alone may take us two classes. Okay, that alone may take us two classes. Risk management. So that is it, guys. So let's keep moving. I hope that answers your question, sir. So a standard lot is 100,000 units of base currency. When you buy one standard lot of Euro USD, you are buying 100,000 euros with US dollars. Okay, you are buying 100,000 euros with US dollars. So if you buy this currency pair, it means you are buying 100,000 euros. If you buy one standard lot, okay, which is this. So for you to even be able to trade one standard lot, you must be able to have about $3,000 and above. Yes, about $3,000 and above. So if you buy one standard lot, it means you are buying 100,000 euros, because one standard lot is equal to 100,000 of the base currency. And remember, this is the base currency, euro. The first currency by the left is known as the base currency, while the second currency by the right is known as the quote currency. Guys, I hope you're following. If what I'm sharing with you is clear to some extent, type in something in the chat. If this is clear to some extent, type in something in the chat. But I don't expect this to be, I don't expect the newbies to get this in one day. No. In fact, you cannot get it in one day. Yes, a little bit. That is what I even need to hear. Clear, small. Yes, that small that is in front is what I need. So once you attend this, you watch this video again, or you have access to this type of class, it will make more sense to you. It will get clearer to you. Once you watch this video, it will get clearer to you over and over again until it sinks into your trading system. Okay, guys, let me tell you something. The most difficult aspect of Forex is your learning period. That is just the most difficult aspect in Forex. It's just the learning period. Once you learn and master it, you are using fish to eat pap now. So let's keep moving because of our time. Okay, so other lot size that we have, as we have listed them, we have standard lot size, we have mini lot size, we have micro lot size. So now I'll use this to explain something. You can see standard lot size, we have 100,000 units. Mini lot size, we have 10,000. So this is divided by 10 to have the mini. Why the mini is divided by 10 to have the micro. All right. So the capital you have, like I said, will determine what you are going to trade out of this pair, this lot size rather. All right. So each of them is divided by 10 as we move down. So standard lot size is 100,000 units. Mini lot size is 10,000. While micro is 1,000 units. So this under micro is where small retailers with $500, $300, less than 1,000. This is where they trade under micro. All right. I hope this is clear to you guys. So let's keep going on. I think we need to stop on this slide because of our time. And tomorrow we are going to move more faster because we'll be rounding up tomorrow. So now, calculating profit in Forex. Few seconds, guys. Few seconds, please. I'm still with you guys. So sorry about that. Trying to sort something out for you guys. Okay. Big apologies, guys. Big apology. Need to sort something out. So, calculating profit in Forex. How do we calculate profit? A lot of people may be thinking, oh, this is difficult. Guys, trust me, it is not difficult. These are just the starting level, but you need to know them, how they are put together. Okay, so we should not spend more than 15 minutes on this very slide, so we can call the session a day before we answer some questions. We won't spend more than 10 to 15 minutes on this slide. So now, calculating profit in Forex. How do we calculate profit? How do we calculate profit? For you to be able to calculate your profit, you must know the number of pip you want to make. Remember, pip is the fourth decimal number. So you must be able to know the number of pip you want to make. You want to make 20 pips. You want to make 30 pips. You want to make 40 pips. You should be able to know this. But don't worry, brokers will calculate this for you automatically. All these brokers will do them automatically. So it is programmed on their systems. You don't need to even bother yourself. But it is just important for you to know how it works and how they do it. Okay? But if you are trading without knowing how they are doing this, it means you don't have full knowledge. I hope you understand, guys. So to calculate your profit or loss, this is not loss. It's loss. We are going to correct that. Sorry about that. Not loss. Lost. So number of pip. Let's say if you are making 20, 30 pips, once you already know the number of pip you are making, then that will let you know the amount you are going to make. So number of pips multiplied by number of lot size. Okay? Number of pip multiplied by number of lot size. Guys, this is not magic. Oh. For those of you who are new, it is not magic. No. In fact, I did not even have this kind of opportunity when I was learning. All these things I'm putting to you guys, don't let me go there because of our time. Let's say number of pip, 20, let's say you want to make 20 pip. Okay? 20 pip multiplied by number of lot size. Let's say you are trading 0.01. Multiply by 0.0, let's say, okay, 1. All right? Multiply by dollar value per pip. It is very, very important for you to know that each pip has the dollar value. Okay? As each pip moves in your favor or against you, it has dollar value. Now look at this right up. Dollar value per pip per standard lot size is 10 US dollars or about 10 US dollars for most of the actively pairs. Now let's say 10 US dollars. If you are trading standard lot size, remember standard lot size is the biggest of all. Standard lot size is the biggest of all. So for you to trade standard lot size, it means you must have 5,000 and above. For you to consider trading standard lot size, it means you must have $5,000 and above. Now, so if you are trading with standard lot size, if a pip moves in your favor, changes from 1 to 2, it means you have earned $10. I don't know if you are getting this, guys. I don't know if this is making some sense to you. Dollar value per pip, okay, per standard lot size. It means standard lot size, each pip on standard lot size worth $10. Each pip on standard lot size, the worth is $10. So if the trade goes in your favor in one pip, just one pip, it moves from 1 to 2, you have earned $10. If it moves from 2 to 3, you have earned another $10, which is $20. And if it keeps going up and up and up like that, then you keep earning money. So if you make just 10 pip, okay, on your standard lot, it means you have made $100, because 10 times 10, 100. And vice versa. If one pip goes against you, it means you are losing $10. If two pip goes against you, you are losing $20. All right. So for standard lot size, it is $10. Let me clean this. I'm still coming back there, guys. Standard lot size, it is $10. All right. Standard lot size, $10. Why mini is $1? Okay, because remember I explained that 100,000 units, it's one standard lot. And if you are trading mini is 10,000. So which means we divide 100 by 10 to get 10,000. So this will also be divided by 10, which means if you are trading mini lot size, you earn $1. Okay. And if you are trading micro, you earn this divided by 10, that is 10 cents. 10 cents. Guys, I hope this is making some sense to you. So if you are trading standard lot size, dollar value per pip is $10. If you are trading mini, dollar value per pip is $1. If you are trading micro, dollar value per pip is 10 cents. Now, this is where a lot of people get greedy. They will say 10 cents. This is too small now. My brother, it is not small. Oh my God. Now, this means if you are trading is 0.01, okay, and this one means if you are trading is 0.1, and this one means you are trading one lot size. So if you are trading under this category, if you are trading is 0.05, it means your profit, dollar value per pip rather, not profit, dollar value per pip rather, here is going to be 50 cents, because 0.01 is 10 cents and you are trading 5. So it automatically means this times 5 is going to be 1 times 5 is going to be 5. So which means you're going to earn 50 cents on each pip on this category if you are trading 0.05. So alone, if you under this category, if you make just 50 pips, 50 pips times 50 cents, that is $25. Guys, I don't know if you are getting this, please, I need someone to communicate with me, please. If you are trading 0.05, it means your dollar value per pip is 50 cents. So with 50 cents, if you have made just ordinary 50 pip, am I correct? If you make, let's even say you make 100 pip, You make 100 pips, that is $50. If you make 50 pips alone, just 50 pips in profit, you have made $25. Don't worry, you get everything. Sorry, Mr. Ashegu. Don't worry, the recording will be available very soon. But that is not going to be today. It's not going to be tomorrow. It's going to be a day after tomorrow. That's going to be on Tuesday when we finish the whole thing. So you can rewatch. So then you decide if you want to join the advanced class or not. Okay? So guys, this is it. So if you are trading mini lot size, so mini lot size, you are earning $1. Mini lot size. So with this alone, if a trade goes in your favor with just 50 pips, it means 50 times $1. That is $50. You have made $50 in profit. And if this is 0.05, wow, times 5, that is 250. That is not where I'm going. I just want to share that with you guys. I'm going to go back to my explanation. Now, this is it, guys. So, dollar value per pip per standard lot is 10 US dollars. Okay? But for the mini, is 1 US dollars. For the micro, is 10 cents. So, you divide each value by 10. So as you make $10 with this in profit on every pip that moves, that change from one number to the other in your favor, it means you are making $10. And vice versa, if it's a trade is going against you, and you are trading standard loss, it means as it keeps going against you in each pip, you are losing $10. So that is why you need a good strategy and good money management, among others. I hope this is clear, guys. So that is it. So that is how to calculate your profit, but you don't have to bother yourself with this. Brokers will get this done for you automatically, but you just want to know how it works. All right. So now we are going to stop on this slide today because our time is fast spent. I never thought we can even use up to 2 hours on this session. Believe me, we are already 2 hours on this session. So in the next 5 minutes, we should be able to round up. But the goal is just for you guys to understand every bit of information. It is not all about the time we are going to spend. All right. So now look at this. I'm going to use this as I'm going to use live chat. I'm going to use the software to explain this aspect so you can understand. Now look at this, guys. Let's say at this level, I hope you guys can see my software. So now let's say you buy at this level. Where is this? You buy at this level, all right? And this number, okay, you buy at this level and you close your trade at this level. You buy at this blue line and you close your trade at this level. This is it. When you hear the saying that says we go long means buy. Okay, now you buy Euro USD, USD card at this level. Let me look out for this price. The price is at let's say 1.2497. okay, that is the price you buy at. Okay, now and after a while, price has pulled up. You can see this massive move to the upside. Price has pulled up and you sold around this place. You sold at let's say 1.2731. Now guys, look at this. You have bought at this level and you sold at this number. How will you know the number of pips in between? You want to take this one away from this, so be able to know how many pips you have made. All right, because of our time today, I thought we'll be able to have much time. I'm going to drop in a video for you today, guys. This video is very, very important for you guys. It will help you to know how to calculate pips. Okay, you must watch the video. The video should be, the lecture is actually part of this, but because of our time, we already have a lecture for that. So I'm going to drop in the YouTube link for you guys right now. Right? So I'll drop the link for you guys right now so you can watch everything on how to calculate, so how to take your profits, how to calculate your stop loss, and how to calculate your take profits. Your stop loss and take profit, because it is very, very important you know it. And you must, it is a must for you to watch that video and understand it. You must be able to know how to calculate your stop loss and take profit. If you do not know that, you are going nowhere. That is just the truth. Okay, so that video, let me even share the link before we go deeper. Before I forget, rather. So everybody copy this link, copy it somewhere and watch the video. All right. So now, oops, thank God it's not closing. So now look at the difference between this level and this level, which is this number and this number. So when you take this away from this, let's try to make that calculation. Somebody should please calculate this and tell us the value. I want to know if you guys are following. Calculate this and tell us the value. Calculate this and take this one away from this one and tell us the value of the chart. I'm waiting for you guys. We have less than 10 minutes to spend before we end this session. I just want to know if you guys are following. I just want to know if you guys are following. Who else? Who else? Who else? Anybody else, guys? Anybody, please? Anybody? Anybody? Yes, you guys are correct. You guys are correct. You guys are correct. Jennifer, you got it right. HBM, you got the value right, but this shouldn't be there. 0.0 shouldn't be there. You got the value right. All right. I will tell you later why you shouldn't have this included. All right. So in fact, once you watch the video on the link I sent to you, you will understand it very well. But you got the number right. So you guys are correct. So now if you take a buy right here, then you want to close your trade in profits at the upside. So invariably, when you hear the word go long, it means buy. Go long means buy. Why go short means sell. All right. Go long means buy. Go short means sell. So guys, we have to end this session right about now. 2 hours is far spent. Okay. So I'm going to buttress more on this chart tomorrow because of our time. I know a lot of you guys are tired, but for me, I am not tired. Trust me. I have had more than 4-hour session in the past. So this one is not new to me. So this is what I do day in, day out. I have had 2 sections today after church. So having this one tonight is, oh, someone said I'm not tired. All right. I like that. I like to hear that. But brain needs to be refreshed. Trust me. When you have a lot of things packed into your brain, when it comes to Forex, you get confused. So let's take it one after the other, guys. Trust me, it's going to be really, really amazing to you guys. Okay, this is just the starting point. Just few seconds before we call it a day. So the point is what I just really want to what I just really want I wanted to pinpoint is what you guys have shared with me, which is the pip value. Okay, the pip value, the difference between the two numbers, is what you guys have shared with me. All right, so thank you so much, guys, for having me today. I really celebrate everyone on the call. Remember, the results will cancel the insult when the time is right. So whoever that says you want to go and learn Forex, you will lose your money, you blow your account, you will do this, you will do that. Let them keep saying it. But my golden advice to you guys is that stay focused, keep striving, don't quit, keep practicing, keep following the right path, keep learning. At the end of the day, the result will start rolling in, and your results will cancel all their insults, and then they will want to meet you and ask you the way out. So any question in the chat under 2 minutes. Thank you so much, Anderson. Thank you, Mr. Shegu. All right, any question in the chat? Quickly, 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 guys. Remember to keep the link, guys. If you have not registered on our broker, here is the link again. This is the broker we recommend you to use. Make sure you register. Make sure you register. Just click the link to copy the link somewhere else. Only God is the best. Prophet. Only God is the best. We are mortal man. So copy the link, put it somewhere. Ensure you click on it and register with the broker. So that is what we recommend. So this is the basic. Let me copy it and put this in the chat again. The basic Mt4 basic training. So you want to learn basic and how to understand this Mt4. One or two things you need to do about it. So you will learn it through this link. So copy the link, keep it somewhere. All right. And remember, this is the PIP link. How to calculate PIPs, your profits and loss. No, it's not. It's not compulsory to register with the broker. No, you can continue to use your broker, Isaac. Okay, it's not. I'm referring to those who don't have a broker. Okay, but if you feel your broker is not doing well for you, we recommend this to you and to everybody. All right. So guys, once you are on our YouTube, support us. All right, support us. Support us. Make sure you subscribe and click the bell button. All right, a lot of good things is going to keep rolling in on our YouTube channel any moment from now. So only those who subscribe and click the bell button will be alerted. So support us, subscribe to our channel, and make sure you share our channel link with your loved ones. All right, so and as a matter of fact, this is our channel link. If you need to send this to your loved ones to join us. Oops. So that's our channel link. So guys, thank you so much for having me. Over 2 hours spent already. I appreciate your courage. So and I wish you guys more success in weeks to come, not years to come, weeks to come. All right. So see more of you guys tomorrow as we round this session up tomorrow. But tomorrow, make sure you come on early. We are going to kickstart exactly 8 p.m. So because I still have good things to cover up with you guys, and put we must round up the session tomorrow. So we'll now talk about those who are willing to proceed to the advanced class. Okay, but trust me, what you will learn tomorrow, adding it on to what you've learned today and yesterday, you should be able to start trading on your own. you should be able to start trading on your own. If you rewatch the videos, practicalize it very well, and start trading. But if you want to get more, you want to go deeper, you really want to become uh I won't say the best because only God is the best. You really want to take it this serious, we have the advanced class for you guys. So it is not compulsory, just recommendation. We don't compulsory that for everybody, for anyone, but the basic class is good for you to start trading. But as you journey in this business, you will realize you want more. All right. So thank you so much for having me, guys. I still remain your host. I still remain your coach. My name remains Abolade Adekola. I see more of you guys on the group, and please let's help those who are thinking, what are they talking about? Let's put in our either positive or negative comment. Let's put it on the group. Okay. Let's help others either to scare them away or to encourage them. Let's put in something on the group. So see more of you on the Telegram group. Thank you so much for having me. And if you are not on our Telegram group, make sure you register. All right. So uh somebody said you want to have my number. So sorry, I don't think I have to. Let me give you my Telegram. You can chat me on Telegram at the Kingmaker. Okay. I only give my phone numbers to all our advanced students. So, but you can chat me on Telegram. You can reach me. You can call me on Telegram. I'll listen. I'll talk to you guys. So, because I'm here to help you, the goal is just to impact knowledge. It's not all about money or anything. So, thank you so much for having me, and have a lovely night rest. And God bless you guys. See you tomorrow. And bye bye for now.